Joining us right now on the Squawk Newsline, Jim O'Neill, former chief economist and chairman of asset management, Goldman Sachs, also a former minister of the UK Treasury. Good morning to you, Jim. It's been a long time.
Yeah, good morning. Nice to be with you. Sorry, I'm not here on video. I don't know what happened with the picture, but there you go.
No worries. I'm so curious what you're thinking on a morning like this, and if you were Jay Powell, what you would be doing.
I've been praying how lucky I am that I'm not him or I'm not in the markets day today, because this is a toughie for the Fed, as it is for the Bank of England here in the UK tomorrow. On balance, I think given how the market is priced right now, as I saw somebody describe it, as they have a bit of a free hit with a 25 basis point move. But I think their statement is probably more important than whether it's 25 or 0, because if they sound too hawkish, they run the risk of setting off a new bit of whatever's been going on in the past fortnight. And obviously, given the inflation numbers last month, they can't really afford to say, well, we're kind of over and done with forever. So tricky, even by the standards of recent times.
So if you go 25 basis points, are you doing that just for credibility? And is that even credibility? Meaning, is that a pretend credibility? Meaning, like, we don't want to scare the markets to think it's even worse than people know. Or, in fact, would you really want to be going and doing nothing?
You know, I think it's kind of, by default, the only choice they've got in the circumstances. So the way you imply that question is kind of right. They're sort of a bit constrained. However, and one of the reasons why I think that's the sensible to do thing is my own bias is that the underlying inflation picture actually is improving quite a bit, particularly on a global basis. I think last time I was on with one of your sister programs not so long ago, I pointed out then, and it's happened much more since, is despite the recovery of China, you know, if you look at global commodity prices, particularly energy, they are falling sharply. And that's where a lot of the source of all of this came from. And we've got a lot of weakness in house prices going on around the world. So the leading indicators would be suggesting, to me, if I was a central banker, we've hiked a lot. We need to be careful to not cause something we're going to regret. And I'm also saying that with the background of somebody that's been around for a few decades, and every rate hiking cycle, amazingly, however nuanced and different each of them are, it seems to weed out some kind of problem in the system. And the key for policymakers is to not to tip it over into, let's call it, an unnecessary systematic crisis.